You ready? You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
Happy Monday, everyone. It is a new week and we are very close to finishing 2021 as well. It's the 20th of December, and a good morning, afternoon or evening, wherever you're watching this in the world, and a special hello to the LCMS Trader Club members as well who are watching this live as well. Hope everyone had a good weekend and you're ready to start a new trading week. So we do have the Aussie and Kiwi in focus today. And for anyone that is new or that is watching this on YouTube and wondering what is going on, this is the daily currency call presented by Forex Trading Asia, and it's episode 444. A quick introduction as well. We do this currency call every Monday to Friday at 11 a.m. GMT +8. And the currencies we look at and analyze are as follows. We do Aussie and Kiwi on Monday, the Euro on Tuesday, Wednesday we do the Pound, Thursday Yen and Gold, and then on Friday we do CAD and Crypto. And in this call with the panel, Jin, myself, and also Gim Hong, we go through the market economic updates, the key support and resistance levels, trade ideas, and of course, much more. And for today, that will be the Bank of Japan tapering, and that will be discussed in further with Gim to start the episode off. Now, we will go through what could move prices, we'll discuss possible trade ideas, and we'll also highlight the potential targets and risks. Now, finally, a disclaimer, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering in any trades. So like I mentioned just before, we do have a little bit to talk about with the Bank of Japan, and we've got Gimme here just to go through the details, and I will hand it over to you now, Gimme.
Quite a bit to talk about for the Bank of Japan. I bet nobody of you expect this from Bank of Japan. Okay, happy Monday, everyone. Let's jump straight into the statement. So the Bank of Japan, as usual, okay, I will share this link with you guys later. Yep, the Bank of Japan, they actually did some changes, okay, during the monetary policy meeting last Friday. First thing, okay, so regarding its QE, okay, they actually have two parts to it. First is this super long name that they give. Okay, it's called the Special Funds Supplying Operations to Facilitate Financing in Response to the Novel Coronavirus. Okay, super long name for asset purchase program. Okay, so what they did was, okay, over here they actually mentioned that regarding small and medium-sized firms, their financial positions have been on an improving trend on the whole, but weakness has remained in some segments, such as the face-to-face services industry. Okay, so given these developments, the BOJ, okay, decided to extend, okay, this whole program by 6 months until the end of September 2022. Okay, it's actually just to to provide the small and medium firms, more small and medium-sized firms, okay, more support in terms of tiding the wave during this pandemic period. Okay, so the first change that they made is the extension of this aid to the companies, okay, by 6 months, right? So the second change that they made is actually a tapering. So purchases of CP and corporate bonds. CP is actually called coupon payments. So CP and corporate bonds is basically just debts that they that they offer. All right. So the bank will complete its additional purchases of CP and corporate bonds at the end of March 2022 as scheduled. Okay, but then from April 2022 onwards, it will purchase about the same amount of CP and corporate bonds as prior to the COVID-19 pandemic. Okay, so before the pandemic hits, okay, they were purchasing at a much lower quantity. Okay, but then because of this whole COVID, they decided to purchase more. Okay, just to provide more assistance to the market, right? So once this whole timeline, this whole program, not say ends, but once the March 2022 comes, okay, so previously they actually planned to just increase the purchase of CP and corporate bonds, okay, up until March 2022, okay, and then plan after that will be decided at a later timeline, okay, which is like right now, last Friday. So they decided to just tone it back down, okay, tone back the purchases back to pre-COVID level, all right? So the amount that they will be purchasing will be decreased, okay, gradually to the pre-pandemic levels, namely about 2 trillion yen for coupon payments and 3 trillion yen for corporate bonds. We don't really need to know, how the whole mechanics behind it works and things like that, but just pay attention, okay, because I'm just going to show you guys the previous statement. So what I show you guys is a December meeting, okay. Let's go over to the November's meeting. October meeting, okay, October's meeting. Wait, where is it? No, not this one. October's meeting. So previously, okay, they were actually purchasing 20 trillion yen in total of CP and corporate bonds, okay. So yeah, previously it was 20 trillion yen, and then right now they're just going to purchase a total of 2 and 3 or something like that, right? So it's actually, I would say, a strong decline, a strong tapering, okay, a strong slowdown in the purchases of CPs and these corporate bonds, right? So it's actually a tapering, and they did not deny it, saying that it's some calibration or something like that, right? It's actually a tapering. So overall good news coming out from the Bank of Japan, okay? I would say a hawkish one, but okay, I mean, if you guys were to look at a chart last Friday against the yen pairs, all right? There was actually a strengthening of the Japanese yen against the other major currencies throughout the day. All right, but the initial reaction to this wasn't that strong, okay, meaning the Japanese yen just strengthened slightly, against the other currencies. So some of you may wonder, okay, was the whole, the whole day of weakening in major currencies against the yen, was it due in part of this hawkish move by the central bank? Personally, I feel that it's unlikely, okay. No doubt, it's no doubt any tapering from central bank is considered good, right? But okay, like I mentioned before, economic data releases, including some minor monetary policy changes. Okay, minor as in like anything that is not hiking interest rates. Okay, so any minor changes in monetary policy is unlikely going to have a big impact on the Japanese yen. Okay, aka strengthening or weakening the Japanese yen. Okay, why is that the case? Okay, because as we know that the inflation in Japan has been very, very low. Okay, let me just show you guys the. Okay, over here I have the national core CPI year on year. Okay, released on a monthly basis. Okay, so if we look at the graph, all right, over just zoom in case. Okay, over around here. Okay, we see that inflation actually hit negative, okay, goes into the negative realm when the pandemic, COVID-19 was declared a pandemic, okay? And ever since then, okay, we see that, Japanese inflation on a yearly basis has hit as low as -1%, okay, back in early 2021 or late 2020, okay? And then right now it starts recovering and it's hovering around the 0%. Okay, even Governor Kuroda, okay, from the Bank of Japan, also mentioned that it's unlikely. Okay, it's going to be the case that the Bank of Japan will be keeping this whole loose monetary policy in place for quite a period of time. Okay, I mean, if you look at pre-pandemic period, when was the last time the Japan CPI, annual CPI has actually hit the central bank's 2% target? Okay, it was over here back in May 2015. Okay, that was like more than 6.5 years ago. Okay, so all the while, okay, all these years, for the past 6 years, Japan's inflation hasn't hit. Okay, it's actually, in fact, okay, 2% is over here. Okay, the marking of 2% is over here. The highest we have seen, okay, which is around 2018, is close to 1%. It's not even over 1%. It's close, coming close. All right, it's below 1%. It's like some 0.8 or 0.9%. Okay, so with inflation not climbing high enough, okay, to the 2% level, the Bank of Japan, there's no way the Bank of Japan is going to increase interest rates. Okay, there's absolutely no way. And during the press conference, Kuroda actually mentioned this. Okay, I quote: "Other central banks are normalizing monetary policies." Okay, meaning central banks are trying to bring their monetary policies back to pre 2008 era. Okay, the 2008 financial crisis. Okay, so they are trying to cut QE, increase interest rates to the level that is before the whole 2008 financial crisis happened. Okay, so other central banks are normalizing monetary policies, but Japan's inflation is stuck around 0% and remains well below our 2% target. Achievement of our target will be some time off. That means it is important that we patiently maintain massive monetary stimulus. Doing so is necessary for Japan's economy and prices. That line, that paragraph, that thing by Governor Kuroda is just a clear, a clear message sent across, saying that we are not going to increase interest rates in the near future. In near future not being 1 or 2 months or 1 or 2 quarters. Near future meaning the next few years. Okay, well, unless inflation were to shoot up and maintain at a 2% target for a period of time, that will likely convince the Bank of Japan to take more actions in terms of monetary policy tightening, aka interest rate hike. Okay, otherwise there's no way. There's simply no way for the Bank of Japan to to actually tighten monetary policy. Okay, the best they can do is to taper QE and then go back to pre-COVID level of purchase, and then to stuck at that level for as long as inflation were to improve, were to climb back up to its 2% target, right? I mean, if you look at the graph previously before COVID, the 2 or 3 years before COVID, when we see inflation close to 1%, the Bank of Japan is still holding interest rate unchanged at negative 0.1%. Okay, so no way. There's simply no way. So because of that, out of the on the list of major central banks, okay, in the world, Japan is definitely falling behind, right? And it doesn't come as a surprise. And because of that, all right, there's not going to be big price movements, okay, in terms of the Japanese yen. All right, whenever as and when we have like Japanese economic data releases that supposedly claims to be good, or even something that like QE tapering coming out from the Bank of Japan, okay, which is why it is unlikely that the weakening of the major currencies against the Japanese yen last Friday was likely due to this announcement. Okay, so as usual, okay, back to normal, we're just going to trade the Japanese yen like it's basically just a safe haven currencies. Okay, so when in times of uncertainty, when there's like poor economic data releases coming from other major currencies, we may actually look to sell those currencies against the Japanese yen. Okay, if let's say, well, hopefully not. Okay, if let's say Omicron were to worsen and things like that, we are likely going to see a strong sell-off in major currencies against the Japanese yen as well. Okay, if central banks are just going to keep monetary policy loose, not going to increase interest rate anytime soon, then this news will likely cause a weakening in those currencies against the Japanese yen. So that is how we are going to trade Japanese yen. That's how we have been trading the Japanese yen, since I don't know when. Okay, since like maybe 2015 or something like that. And in the near future, we are likely still going to trade it the way it is. Okay, so with that, any questions on the BOJ? No questions. Pretty straightforward. They carry out QE tapering. They extended this special aid provided to companies, and we don't see a major change in the Japanese yen because of what I've mentioned. Okay, low inflation. So if there's no questions, okay, then I'll just hand it back to Scott.
Thanks for that, Gimme. And just to get straight into it, we do have the US dollar index now as well. And also, if you are a regular or you're watching this and you're new to the show, you're probably wondering the background. We do offer a managed account service to finish the year. It was very strong. It was a 4.27% return this month as well. We've just finished our trading month. It's 28.67 up for the year, and then 110.89 since inception, which was September 2018. So that is some context to the background. So please feel free to reach out to us in the chat here or in the Forex Briefcase chat within the LCMS Trading Club forum as well. So what I will do now is we'll get into the US dollar index. And it was another interesting session with regard to how the US dollar behaved. And there was some interesting things that I was, picking up this morning, just going through what happened. I didn't trade on Friday night. There were some opportunities, and I think members in the club were around. We do have people that are outside the GMT +8 time zone, so people were trading. It looked like, and we did see on the daily time frame. I'll just bring that up. We did see price close well above 96. It was 96.62, and we are seeing a small pullback now. But to put that in context, we don't have a lot of news out, obviously, this time of day, and also for later today, that's pretty much the same. But just to provide some insight, so for Friday, and we saw Thursday night session for the US, we did see some inflows into the yen, and then we saw Friday was the dollar. So what I'll do, I'll bring up this article here that was on Forex Trading Asia. And we did see some commentary from Anthony Fauci out of the US as well. And it was just mentioning that this key point here was that some of the rapid at-home COVID-19 tests available were not accurately picking up the new super mutant Omicron variant. That's his language. That's pretty significant, the super mutant Omicron variant. But we just haven't seen any concrete evidence that would suggest that it is worse than Delta, but it definitely spreads a lot quicker. So we just saw that, really fueling some concerns. We saw people obviously probably looking to get out of the market as well with regard to what we saw in equities. So we saw a bit of a risk off move now, and we are seeing, like I just showed, a small pullback intraday on the US dollar. But just to sort of go through the news for today and also this week, I'll just bring up the calendar with Forex Trading Asia. So, we did see on Friday there wasn't a lot of US news at all. We just saw a lot of, concerns that were present. And we've obviously got the fact that the market knows interest rates are coming up as well. So for this week, we've got a little bit of news out today that will be discussed later on the Kiwi. We do have the Aussie and Kiwi in focus today with Jin. And then we've mentioned there's some pretty significant news on the CAD, but obviously we've talked about that on Friday. We've got that trade idea still open. And then later in the week, we've got some US news, but it's going to be one of those sessions. Well, the week is going to offer, some opportunities, but you've just got to be a little bit cautious because most likely we'll see less liquidity as well in the markets too. So something to be very aware of. So in regards to the US dollar index, we'll just see where this pullback goes. We've seen, 96.50 offering some support recently, but I would say that, nothing worth rushing into right now, and just, keep short-term focused. And we've said that a few times, but we do have Jin now just to go through the Aussie and Kiwi. And what I'll do, I'll share the details of Forex Briefcase in the chat as well, just for anyone that looking to get some more information. But over to you now, Jin, with Aussie and Kiwi.
I have nothing to add on Aussie and Kiwi. Just look at it. Just look at the way Aussie and Kiwi has been performing. Just as you guys were scrolling through the news this week, today, nothing else happening after, we've got some news being released. And then on Tuesday, we have the UK retail sales numbers. Tell you more about that on Wednesday when we talk about the pound dollar together with the CAD. Following on from that, we do have the pound GDP numbers, the US GDP numbers, And then on Thursday, a couple of news, but then after that, it's back to the holidays. It's holiday period. So, the thing about trading this end of year period, it gets a bit tricky. Why I say that is because two things will happen. One is we're going to see not a lot of movements, especially given that the Aussie dollar, for example, is sitting at that 7120 support level. We might see it sit in consolidation, but what usually happens is after Christmas, we see a quick, strong rally on the US dollar. This time Christmas is on the weekend, so I'm not sure whether we're going to see that rally on Monday next week. But looking at the way the things are without the news, following the trend, what you should be looking for, if you really have to trade, I would say trading volume at this point should be low, but if you really have to trade, look towards that downside move. I would drag it out and say that it's going to take a bit longer. If it breaks below 70, below 71, then look to sell for that 80 pip move towards the downside, towards 2 weeks ago low point here. You'd have an 80 pip, 40 pip stop loss, 80 pip take profit level of 1:2 risk reward ratio towards the downside, towards that 70 level, 0.70 level. But if you don't have to enter a trade, I would say don't jump into the Aussie or the Kiwi dollar here on the H4 time frame. We have seen it track lower. We have seen that move towards that downside because, as Scott was sharing with you, we have seen that US dollar track higher, bouncing off that 96 support level. But in terms of upside, probably the maximum you see is 96.85 from its current 96.55. So I don't see a lot of downside more on the Kiwi dollar, for example. I would say that if it breaks below its current point of about 6720, you can see a brief downside move towards 6665, for example, in that sense. But again, I would drag it out, say it'll take a bit longer. That 50 pip move, keep a very tight stop loss of about 25 pips. Again, a 1:2 risk reward ratio towards the downside. I would think that for this week, if you're looking at any trades, the most likely scenario would be the pound dollar, as we see all the pound dollar news to be released into this week. And also with all that volatility the pound dollar has been having, sitting at that 1.3222 support level, quite a bit more trading opportunities there, but I will tell you more about that later into the week. So very short and sharp session. I think we'll probably be looking at more short and sharp sessions for this week. Not a lot of trade ideas, not a lot of trade opportunities. Make sure you don't feel like you have to be forcing out trades. Go enjoy the festive periods a little bit, and we'll get back to you on that. With that, I'll pass it back to you, Scott.
Thanks for that, Jin. And that's it, guys. I think the year's been pretty decent for most, especially for the Forex Briefcase managed account holders. And I have shared the trade idea as well in the Aussie and Kiwi discussions thread. But like mentioned, guys, this is, the week just to be a little bit more, patient and just be very picky as well. So that is that. Also, Imran, I've shared the article in the trading floor chat as well. And thanks again for joining us, everyone, and hope to see everyone tomorrow for the Euro analysis. And I hope everyone has a lovely rest of the Monday. Bye for now, everyone. Thanks for watching.